Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Monday, the EURUSD pair continued its decline after rebounding from the 50% Fibonacci retracement level at 1.1472. toward the 23 Fibonacci retracement level at 13.95. A rebound from this level would favor the euro and renewed growth within the 13.95-14.72 trading range. Consolidation below 13.95 would allow traders to expect a continuation of the decline toward the next Fibonacci retracement level of 0%. at 1.1325. The wave structure on the hourly chart remains bearish, despite the prolonged but weak advance by the bulls. The last completed downward wave failed to break below the previous low, while the most recent upward wave has not yet exceeded the previous peak. The geopolitical situation has deteriorated again, as Iran and the United States have resumed blockades of the Strait of Hormuz and active military operations. It will be possible to conclude that the bearish trend has ended only after the pair breaks above 1.1473. However, for the past 3 weeks, the bulls have demonstrated nothing but weakness. On the 4-hour chart, the pair remains in a sideways range. Consolidation above 14.11 suggests the possibility of some additional gains. However, the price has changed direction too frequently recently, while trading activity remains subdued. No emergent divergences are currently observed on any indicator. The descending trend channel remains valid. And we're starting with pound sterling dollar pair with Din Lao. On the hourly chart, the GBPUSD pair confirmed a second consolidation below 34.54, 34.57 level on Monday. However, today the bear's attack was halted by fairly positive UK economic data. A rebound from 34.54, 34.57 would favor the US dollar, and a resumption of the decline toward the 76% Fibonacci retracement level at 1.3382. Consolidation above 34.54, 34.57 would increase the likelihood of renewed growth toward the 35.26, 35.43 resistance level. The wave structure remains bullish. The last completed upward wave broke above the previous peg, while the new downward wave failed to break below the previous low. Therefore, the bulls continue to maintain the initiative. The bearish impulse that began in 2026 has already ended, and only geopolitical developments could prevent the bulls from extending their advance. However, at this stage, geopolitics is likely to trigger only a corrective pullback. On the 4-hour chart, the GBPUSD pair rebounded from the 23% Fibonacci retracement level at 35.38, reversed in favor of the US dollar, and consolidated below the 34.67, 34.82 level. Therefore, the decline may continue toward the 50% Fibonacci retracement level at 1.3409 and lower. Consolidation above the 34.67, 34.82 would open the way for renewed growth in the pound. No emergent divergences are currently observed. That's all for today. See you online soon.